Good morning. Thank God it's Friday. This is Business Morning. Time to do the final current and relevant business conversations here on the program. And I'm Ini John Mekwa. We get right into it now. Beginning with global oil. Oil prices were set to register their third consecutive weekly gain for the first time since April, rising on Friday due to supply disruptions in Libya and Nigeria, unfortunately, and hopes of higher demand for crude due to easing U.S. inflation. Brent crude futures had added 5 cents to $81.41 for a barrel, while U.S. West Texas Intermediate crude futures rose 9 cents to $76.98. Both benchmarks, which have risen about 9% this month, are on track to settle higher for a fourth session in a row. On Thursday, a number of oil fields in Libya were shut down in a protest by local tribe against the kidnapping of a former minister. Separately, Shell has suspended loadings of Nigeria's Forcados crude oil and due to a potential leak at a terminal. Protests in Libya alone could take away more than 250,000 barrels of oil every day from the market. Crude prices are getting a boost from expectations that the oil market will get very tight as Libya and Nigeria deal with these disruptions. Also, Russian crude exports finally has declined. The Organization of Petroleum Exporting Countries, that's OPEC, yesterday upgraded its oil demand forecast for 2023, adding that it expected demand to grow 2.2% in 2024. Now, still staying in Nigeria, Nigeria has emerged as the 7th global liquefied natural gas exporter in 2022. And that's according to data from the International Gas Union. A breakdown of the report shows Australia clinching the #1 spot in the list of top 20 global LNG exporters for last year, with 80.9 metric tons exported during the year. And the United States bagged second position, exporting 80.5 metric tons, while Qatar came in third place. Russia secured the fourth position, exporting 33 metric tons, while Nigeria stood in seventh place with exports of 14.7 metric tons. Edible oil now. Malaysian palm oil futures rose more than 1% on Friday and was set for a third consecutive weekly gain as the strength in rival edible oils prevailed over a skyrocketing ringgit. The benchmark palm oil contract for September delivery on the Bursa Malaysia Derivatives Exchange climbed 48 ringgit, that's about 1.27%, to 3,914 ringgit, that's about $864 a metric ton during early trade. Indonesia is planning to set its crude palm oil reference price at $791.02 per metric ton for July the 16th to the 31st. And still looking at that, Dalian's most active soy oil contract jumped 2%, while its palm oil contract hiked 2.1%. Soy oil prices on the Chicago Board of Trade inched up 0.2%, and Malaysian ringgit, that's palm's currency of trade, appreciated 1.29% against the dollar and hit its highest level since May the 18th, earlier in the session. A stronger ringgit makes palm oil less attractive for foreign currency holders. Grain now. Chicago soybean futures gained more ground on Friday, with the market poised for its biggest weekly gain in a month on concerns over U.S. weather and strong Chinese demand, which rose amid concerns of the Black Sea grain export deal, which is expected to expire next week, while corn edged higher. Wheat added 0.6% to $6.43 for 3/4 of a bushel. Corn rose 0.4% to $5.02 for 1/4 of a bushel. For the week, wheat is down 1%, while corn added 1.6%. Portions of the northwestern Midwest are set to remain dry in the coming week, and key growth period for soybeans still lies ahead in August. The USDA earlier this week projected massive harvest of both corn and soybean crops this year, despite drought conditions stressing plants during early stages of development. China imported 10.27 million metric tons of soybeans in June, and that's up 24.5% from a year earlier, according to customs data, as large purchases of cheap Brazilian beans reached the market. Wheat traders continue to monitor dry conditions for spring wheat in North America, results from winter wheat harvesting across the Northern Hemisphere, and talks to salvage a Black Sea export corridor from Ukraine that Russia is threatening to abandon when it expires next week. Still talking food, but back here in Nigeria, we're hearing still more from the president, new policies and new things happening. This time, he's declared a state of emergency on food security. According to the special advisor to the president on special duties, communication and strategy, Mr. Dele Alake, the president made a declaration after a meeting he had with stakeholders on agriculture and food production value chain.
In line with this administration's position on ensuring that the most vulnerable are supported, the president has declared with immediate effect the following actions. 1, a state of emergency on food security. 2, that all matters pertaining to food and water availability and affordability as essential livelihood items be included within the purview of the National Security Council. Now, as a direct and immediate response to this crisis, a number of initiatives will be deployed in the coming weeks to reverse this inflationary trend and guarantee future uninterrupted supplies of affordable foods to ordinary Nigerians. We will immediately release fertilizers and grains to farmers and households to mitigate the effects of the subsidy removal. 2, there will be an urgent synergy between the Ministry of Agriculture and the Ministry of Water Resources to ensure adequate irrigation of farmlands and to guarantee that food is produced all year round. We will establish ranches in collaboration with state governments, and the federal government will pay for the land.
So there we have it, state of emergency on food security from the presidency there. Let's delve into what this means. And of course, we do remember that the lawmakers have approved the request of the president, President Bola Tinubu, for 500 billion naira for the palliatives. So these are the issues ahead of us this morning. And to discuss this this morning is the Chief Executive Officer of Business Day Media Limited, Mr. Frank Aigbogun. Thank you so much for your time, Mr. Aigbogun, for joining us.
Thank you for having me.
Great. So we're having a lot of pronouncement from the president. This is very close home, talking about food security and the state of emergency. And we heard there that the special advisor, Mr. Dele Alake, outlisted some of the steps that the presidency hopes to take in a couple of days. We do hope it's a couple of days. But really, from your perspective, declaring a state of emergency, what really does it mean? What should it imply?
Well, the statement from the president wasn't just an empty statement of simply announcing the declaration of national emergency. It also came with the order that matters relating to food will now be treated under the purview of the National Security Council. And I think this is quite evidential of the kind of policy direction that we should expect. It simply means that it is no longer going to be treated, that's a matter of food and food prices, will no longer be treated just as business as usual. And don't forget that what we are seeing, and this is a context, include farming downtime as a result of the insecurity in very important farming belts around the country. There is also the rising prices, or the trend of rising prices, which are impacting Nigerians, leading to a fall in demand. And it cuts both ways. When you have a fall in demand, it means that people are not eating. They are not having the nutrition that they need. And it also means when you have drop in demand, that farmers are in trouble, their inventory is rising, they are unable to sell. So it is indeed a national calamity, and it makes a lot of sense for the president to move urgently, as it does appear to be the case.
Yeah, so now saying that they will be part of the Security Council means that when they're having Security Council meetings, then we'll have stakeholders from the agriculture sector also tabling their issues there. I guess that's what that means.
Precisely. It also means that we are no longer taking the matter of insecurity in these critical farming belts simply as a matter of shooting and killing and bloodletting. We are also now going to, consider it as indeed an existential threat, a threat to the livelihood of Nigerians, which means that the service chiefs indeed have their work cut out. Nigerians will be expecting very, very urgent intervention to bring down the level of insecurity, to attract farmers back to the farms, so that we can begin to see cultivation in the level that we deserve as a nation.
Yeah, I guess that's heartwarming, because even as I said yesterday here in the program, we're talking about the issue of inflation, and we saw how inflation eased a whole % in the United States, and wondering why, in spite of the rate hike back here in Nigeria, inflation has not eased, especially food inflation. So I guess if we see a lot of positive movements and action in the security space around the farmers, perhaps that would change sentiment, and over time increase supply and thereby bring down inflation.
Precisely. I mean, the matter of inflation in Nigeria is multidimensional. Business Day had its CEO forum yesterday, and a number of the CEOs who were there were saying, for instance, that while inflation is falling around the world, in Nigeria, it is still surging, which means that we perhaps don't have a good handle on what the factors are that are causing inflation in Nigeria. And we may be treating malaria instead of treating kidney ailment. So that is essentially the problem that we see in Nigeria. But back to famine and food insecurity. I don't think we all have as yet come to a fuller understanding of the rot that Nigeria has been left in after 8 years of ineptitude and incompetence. At the CEO forum yesterday, keynote speaker, Dr. Additional, was saying to us that over the last 4 years, Ethiopia has become an exporter of wheat. From being an importer of wheat in 4 years, has now become an exporter of wheat to countries including Egypt. The program under which Ethiopia managed to get to where they are now was available to Nigeria. The idea was to grow up to 6.2 million tons of wheat. As usual, Nigeria failed to take advantage. Ethiopia went ahead, made a good, impact with that, and we see where Ethiopia is today. So, we are not just dealing with insecurity; we are dealing with failure of government policy over the years, which has left Nigeria grasping for breath when it comes to food security.
All right. Also, one of the steps which Mr. Delelake talked about there was the issue of ranching and casting our mind back a little bit about the issue of ranching or no ranching. We know some of the controversies around it. How do you see this helping to move forward this conversation and dealing with the issue of food insecurity at this time?
I'm expecting that some of the divisiveness that we saw over ranching in the last 8 years may have eased a bit. And I also expect, because that was part of the pronouncement by the presidency, that the federal government will be collaborating with the states, because in truth, all the land that farming is conducted in Nigeria belong to the states. So indeed, it's the state governments really that you need to incentivize. It's the state government that you need to catalyze to work with their farmers to get farming done, even if insecurity is a matter of federal government concern. So my hope is that the government, federal government, that is, will put in place a clear a set of objectives of what it wants to achieve, and can bring state governors into the room and other agencies, including multilateral partners, just to ensure that we can actually get going. The federal government also said that they were going to energize virtually all of the 12 river basin, in Nigeria, that are significant tools, for irrigation, for farming. So there is already some idea in terms of what the federal government will do, but it makes a lot of sense that it begins very quickly this promised collaboration with the 36 state governments.
And we hope this time that the federal government is talking about, looking the way of agriculture, that there'll also be attention given to improving the farming tools. So we are no longer just practicing subsistence farming. And then we'll also talk about the issue of adding value to these raw materials, and not just, we put it on the ground, it grows, we take it out and sell it.
I agree. I mean, there is the need to also improve fertilizer availability. Thankfully, we are now able to produce fertilizer in Nigeria locally at home. So we need to ensure that the farmers have the fertilizer, to put in the ground and to be able to get good harvest. There's also the need for improved seedlings. I mean, Dr. Adesina was saying yesterday that the progress that Ethiopia has made relies essentially on the availability of improved wheat seedlings that has raised output per hectare from 1.2 metric tons that we see in Nigeria today to something like 5 or 6 metric tons per hectare in Ethiopia. So there's a lot of work that needs to be done. This has to be approached from a multi-sectoral. There's also the need for funding as well, to ensure that those who are going into farm, but also importantly, while you support peasant farmers, there is that requirement, in my view, to ensure that we bring in large-scale mechanized farmers into the picture as well.
Then just before we let you go, we also know that the president has gotten the approval for the 500 billion naira for palliatives. And I think I saw somewhere it's going to be 8,000 naira for households. We've talked a whole lot about what palliative should be employed, to get adequate impacts for the removal of subsidy and the spilling impact. But I mean, how do you think this 500 billion naira could be best used for optimum impact?
Well, I think for me, there are 2 comments that I'd like to make there. Firstly, there is, in my view, a need to increase whatever it is that the federal government is making available. 500 billion will not cover it at all. It will have to run into into trillions for you to make the impact that the federal government seeks to make. A second and more fundamental view for me is that palliatives tend to just provide a bandage around the wound. Palliatives will not heal the wound. So there is a need for government to move very quickly to begin to enthrone policies that are far reaching in impact, that are enduring and sustainable. I just look at palliatives with a pinch of salt, and that's my view about palliatives. They only put a bandage around the wound.
All right, but I guess it will also beg the question, if you say like 500 billion naira will not be enough, then we may begin to ask how much has the federal government saved in 1 month of not paying subsidy, and what's the money going to be used for? Perhaps that would buffer the 500 billion naira we're talking about.
Well, I mean, again, that is a conversation for another day. The question about how much the government of the federal government is saving. A governor was speaking to me yesterday, and I recall that Business Day have done a story on this last week, that if everything were to go into the Federation account, you could see the FAC post doubling. But the governor said to me that, you know what, NMPC over the years has not been properly funded for a subsidy or under recovery of subsidy. So, and you are aware that NMPC said it's been owed about 2.8 trillion. So I'd imagine that the about 400 billion savings from subsidy from the day that monthly, from the day that subsidy was removed, a good part of that will initially go into covering the big hole that the Buhari government dug at NNPC before it can begin to then flow into FAC allocation.
Sounds like Nigerians will still have to wait a bit until that hole is covered before they can feel the impact. Well, thank you so much, Mr. Frank Iwogon, the Chief Executive Officer of Business Day Media Limited. Thank you for your time this morning.
Bye-bye.
Welcome back to Watch Your Business Morning here on Channels Television. We have celebrated especially the first quarter results from the market. Capital importation, we saw a jump quarter on quarter. Well, year on year, it did drop. And we saw the equities markets perform really good and impressive and still doing good, even though in the last couple of days, I think 2 days, we've seen a huge amount of profit taking from the market, an expected cycle going in the market and dealing with investor sentiment. But what does this tell us about what to expect in the second quarter? We have joining us for this conversation Babajide Atolagbe, portfolio manager with Afrinvest Asset Management, joins us virtually from here in Lagos. Thank you so much, Mr. Atolagbe, for your time this morning.
Good morning. Thanks for having me.
Good to have you. So we saw a jump even before the elections were concluded, because the capital importation we saw was for the first quarter, and that was January, February, March. Election ended in March, the last election we had in March. So it seems even before the president took on and all of that, investors already had anticipated positive sentiment around the market. So how can we explain that? Is it just the fact that an old administration was going off? I thought that was supposed to be a time of uncertainty.
Yes, you're right. Like you rightly mentioned that at the start of the year, we saw some interest in the market, simply because investors were preparing for a new financial year, and we saw optimism around the fact that the capital market was expecting the new administration, and we had a sense that whichever candidate emerged as the president, all the three candidates had pro-market views. So that informed the market that irrespective of whoever is on board, Nigeria is likely to push and promote policies, and that would actually lead to inclusive growth and also drive capital market participation to the optimal point. So that was what was responsible for the interest we saw prior to the election. And of course, after the election, we saw that interest also doubled. I recall that the Nigerian stock market had gained 7% in the first quarter. But in the second quarter, after the election, it gained additional 12%, taking the year to date to 19%. And this was largely on the back of optimism around the new policies that were being dished out by the current government. and the fact that investors are now beginning to discuss potential investment back into the Nigerian capital market, given the fact that the new administration is actually sending out a blank sheet to investors to come and participate in Nigeria.
So for the equities specifically, we saw that in the first half, there was a 20% market return. What should we expect in the second half?
Yeah, I mean, going into the second half, we expect to see the momentum to continue simply because, typically in the global environment, we're having this risk on sentiment, given the fact that most of the factors that affected investor sentiment globally are already fading out. Speaking of inflation in the US, which has moderated to about 3%, and the fact that central banks across the world are beginning to rethink their position on interest rate hikes. So all of this global sentiment has pushed investors out there to begin to take risk position in emerging markets. So from the global perspective, we still think that we are likely to see more foreign participation in Nigerian equities market because global risk sentiment are increasing. And from the local perspective as well, local participants are still likely to push more interest, given the fact that inflation is currently running at a very high rate, and the yields in the fixed income market are not necessarily attractive as we speak. So we are likely to see more interest in the equities market on the back of low yield in the fixed income environment, as well as improved risk on sentiment, given the way the current administration has dished out pro-market policies that are likely to change the tides of the Nigerian economy, and obviously stocks that are listed on the market are likely to benefit from these policies, and their margins are going to be better. But there are some downside risks that are attached to this, because now we see inflation spiraling on the back of higher food prices, and also the pass-through effect of the increase in PMS prices. So this is likely to affect profitabilities of some bellwether stocks, given the fact that not all of them are likely to pass on this cost to consumers. And when we begin to see companies taking in some major hits in terms of high cost pressures, it affects their bottom line. And of course, that goes into how these companies are being valued. So the inflation that is on the rise, coupled with some other infrastructural challenges that were still going on, are still likely to affect, or these are notable downside risks that could affect the market gaining positively towards the second half of the year.
So another downside of this positive news is that fear, this portfolio investment has been described as hot money. So any news breaks now, it's easy, they just pull it out, and we know the risks that presents, to the market. Is there a way we can make it more stable to translate it? I know there are different types of investment. Is there a way to make it spill over to direct investment, which is more stable and more predictable, for the economy?
Yes, you're very right. I mean, excuse me, the foreign capital importation is broken down into foreign direct investment, foreign foreign capital investment, and other investment. But largely, we've seen that capital importation into the capital market is known as hot money, and it gives the country some high susceptibility to external vulnerabilities, and if that happens, the country might begin to experience some short-term problem. And I mean, the right thing to do is not to chase only capital importation through investment in the capital market, but to channel or to try and attract investment through other means, such as foreign direct investment, right? Because foreign direct investment are much more medium to long term, and investors are actually going to come in with a lot of capital, make use of the available labor, and also develop the infrastructural base of the country. So I mean, in terms of attracting capital into Nigeria, I mean, it speaks largely to it is a responsibility of the federal government to push for that, and they are likely to push for that through rolling out market-friendly policies that would allow investors' confidence to increase, so that they can find comfort in playing in the Nigerian space. And if they can do that successfully, we are going to see the resumption of investment in FDI in Nigeria, because over the years, most of the FDIs that are coming into Africa, most of them have been avoiding Nigeria. We've seen the likes of Ghana, Togo, South Africa attracting FDI. And when we speak to foreign investors, the feedback we are hearing is that the political risk, the political uncertainty, and the structural deficit in the country is a major risk factors that is making investors, avoid Nigeria. So the current government and the federal government, in accordance with the state government and all major participants, should look towards addressing the infrastructural deficit, making Nigeria a more conducive place for investors and even locals to do business. And before you begin to see, cool money come into the economy, and that will drive growth for Nigeria on the long term. As regards, relative to the FBI money, which is usually short term.
Yeah, the bonds market has been kind of quiet. I think last week the federal government did repay that $500 million for foreign bonds. But what do we expect in this second quarter for the bonds market?
Well, for the Nigerian Eurobonds market specifically, we're likely to see more interest in the market simply because risk factors are moderating. Inflation is moderating across the world. We also have instances where central banks are, beginning to hint at, causing interest rate hikes, right? And these are all positive news for investors. So I like to see investors take on more risk in Nigeria. And on the Eurobond market as well, investors are already excited about the new policies that are being rolled out. Speaking largely of the FX, the full subsidy removal, which on the long term is likely to lead to cost savings for the government, and that simply means that the government has more ability to service external debt. So investors are pretty much optimistic about this, and we're seeing interest. That interest is likely going to be sustained across the rest of the year. For local fixed income space, the market has been hindered. The market has been affected largely by some policy constraint and inconsistency that has affected the ability of fixed income traders to actually speculate, right? And this has happened since 2022, when we had issues like, frequent CRL debits and what have you. So that market has been really calm. But lately, since the new administration has started implementing a much more market-friendly, opened up policy, we're beginning to see new reforms in the capital market that are enabling investors in that space to speculate better. And we've seen positive reaction over the last 20 to 25 days as the yields in the fixed income market have actually moderated, to a large extent. So going forward, we still think that fundamentals are largely going to play out in that space, coupled with the fact that buoyant liquidity would also drive yields downward. And the government has hinted that they want to run a low-cost government, in the sense that they want to reduce interest rates so that the debt service of the federal government will reduce. And if that is coming on board, coupled with the fact that investors are looking for more return in terms of capital appreciation, we're likely to see the local fixed income market moderate positively, and investors will likely record gains in that space.
So how would you advise investors to position for the second quarter?
There are a lot of opportunities across assets, but let me start with fixed income. Fixed income has, in my opinion, or in our view, has more potential because fixed income is largely interest rate sensitive, right? And we are currently in a period where monetary authorities across the world have reached their interest rate target, and they are considering pausing, and then they are also looking at a further reduction in interest rates in the coming years. And if this happens, fixed income market is largely going to be a major beneficiary of that event. So, I mean, investors who are looking to take risk are advised to start taking position now, because we've reached the turning point in terms of the current financial system trajectory. We've reached a turning point, so investors should position ahead of that turning point. Also in equities, equities still offer investors the opportunity to earn return that are more than inflation levels. So investors should also carefully invest in that space. And lastly, I must say that investors should also consider diversification, as they can begin to explore asset like mutual funds and ETFs to diversify and balance their risk in 2023.
So what we saw U.S. inflation taper, and of course we saw the markets react to it. What do you see as the global and then the local themes for the market in the second quarter?
Well, for the U.S. inflation, right, the numbers have been really, really exciting. We started inflation from about 5-6% here and year, and we're currently at 3%. So that's a positive number for the U.S. Fed and the U.S. investors in particular, and that has translated into gains across different asset classes. We've seen interest spiraling in fixed income, equities, tech stocks all jumping. We've also seen interest in digital assets such as cryptocurrency. So that downward trend in inflation has really, really improved risk on sentiment, and we're seeing interest flowing across board. The only issue now is that some market participants are a bit edgy, because the Fed, despite the fact that inflation is moderating, the Fed is still showing some signs of wanting to increase interest rates to completely tackle this current phase of inflationary problem. So that is some of the risk that is affecting investors playing fully or making us returning into a fully bullish market. And for the local space, inflation is still likely to trend higher. And that will be largely driven by food and energy inflation, because the pass-through effect of the subsidy removal is likely going to affect prices upward, and businesses are likely to transfer this cost to consumers. So we still see inflation tracking higher, at least for now, given the fact that we're also in the planting season. And I mean, for the most part of the year, we see inflation trending higher, given that the factors driving inflation are still around the corner. And the Central Bank of Nigeria, might not likely take the same direction that the Fed is taking, because in Nigeria, inflation is not largely driven by demand side factors. Most of our inflationary challenges are from the cost push side. So in terms of the policy direction of the Central Bank of Nigeria, we don't think that the bank has a stronger chance or a stronger leeway to increase rates higher. However, we see them maintaining rates or trying to even reduce rates in line with economic growth in the second half of the year.
All right, thank you so much for those insights. Mr. Babajide Atolagbe, Portfolio Manager with Afrinvest Asset Management. Do have a great weekend.
Thank you.
Oh, talking about the markets now, let's get details of yesterday's trading with Aniti Edet. We see profit taking continue at the equities, but I guess that doesn't mean that it's a bad thing. It's something that is expected. If profit accumulates, somebody has to take it out.
Exactly, and I'm sure lots of people have made money. Like I spoke to one of the brokers today, and he said, of course, we've been smiling to the banks because what we gained just this week, the market gained about 1.14 trillion naira. And then, of course, if you look at the scenario of the market, it's because of the market-friendly policies announced just almost about a month ago. And then, of course, we saw the intrigues in the FPN Holdings share acquisition, which is also causing some drama. You see investors in that market space also taking advantage of the gains. But at the same time, we'll talk about that later. We're focusing our attention first on the fixed income markets. At the close of Thursday's trading session, this is what it turned out for the market. It was a quiet trading, another quiet day of trading at the FMDQ OTC exchange, where we saw the average yield at the Treasury bills markets closing flat at 6.3%. But take a look at your board there. The 11th of July 2024 paper, 22 deals at about 32.69 billion naira. It was a major contributor to what you see here, 34.48 billion naira for the total transactions there. Moving over to the bonds market of that fixed income market proceedings in the FGN bonds secondary market was bearish. Average yield there expanded by 6 basis points to 12.8%. But what you see on your board there, the 27th of March 2050 paper was a major contributor to a total number of 15 deals on that market space, and then at about 10.9 billion naira. The same for the OMO market, open market operations there. We also saw a bit of some transactions there. But now to give us more details about the fixed income market, especially when we talk about the diaspora remittance and the currencies market, let's talk to Taiwo Olajubu, a forex dealer at FSDH Merchant Bank, to tell us more details about this market. Thank you for joining us, Taiwo.
Thank you for having me. Good morning.
Yep.
So basically, I'll be speaking to the fixed income market and the FX market. So for the Treasury bills market, I mean, yesterday it was largely quiet, but at the start of the day, we saw the 11th July bill trade at about 5.5, but it closed the trading day at about 5.8. We've seen market participants try to resist that low level, as we saw with the 27th June bill. So the market has largely been quiet. For the bonds market as well, I mean, there's a bond auction coming up on Monday. So market is relatively trying to position towards that auction. And as we know, we have the 29s, the 33s, the 38s, and the 53s papers on offer. I mean, we expect that it will largely close lower than where it closed at the previous auction, at last month's auction, because it's currently trading about 150 basis point lower than where it's closed across the curve.
Okay, so that's for the forex market, but I'm very much interested on the FX markets because recently, I think on July the 10th, the central bank announced the resumption of diaspora remittance to be paid to beneficiaries for using the anchor as using the investors and exporters window of the market as the anchor rate for the transaction. So what impact is this having for the naira? We saw the naira appreciating by about more than 4%, closing at 746 naira 20 kobo at that market. So how is this impacting that market?
Okay, so as per yesterday's rates closing at 746 levels, I mean, the CBN intervened in the INE window. So that was largely the reason why we saw rates close at that level yesterday. In terms of the publication on the IMTO, I mean, CBN released a list about 62 IMTOs that are now, before now, I mean, it was strictly that clients could receive their funds in dollars, but now clients can now receive their funds in naira. So, I mean, I think what we expect to see, maybe we expect to see some of these funds flow in through the INE window from the IMTOs if they have clients that are okay with, because right now it's not like the USD option has been ruled out. So there's still a USD option, but there's also a naira option. So if we have clients that are okay accepting naira, then the IMTOs might be looking to sell these funds to banks at the INE window rates to get naira, which will be disbursed to their clients. So, I mean, in the long run, we expect to see improved liquidity in the INE window. I mean, with the support of the CBN as well.
Okay, so Taiwo, in just 40 seconds, what's your outlook for the forex market and the fixed income market for next week when the National Bureau of Statistics will release the June inflation data?
Okay, for the FX market, I mean, we've seen that demand has continued to outweigh supply, and we've seen that we've seen a lot flows in the INE window, given that exporters can now sell at their preferred rate. I mean, it's a willing buyer, willing seller model. We don't expect anything significant to change, except, I mean, more funds are being sold into the market on the back of the CBN intervention. And if we see flows from FDI, that's the outlook for the forex market. For the fixed income market, like I said earlier, there's a bond auction. I mean, opening Monday, market will be largely quiet in anticipation of the bond auction that is happening on that day. We expect that yields would close largely lower than where it closed at the previous auction. We've seen interest on these securities because, I mean, even from the T-bills auction that happened on Wednesday. We saw rates close lower than where it closed at the previous option. The 1 year closed at 5.94 compared to 6.3 where it closed at the previous option. So there's some sentiments around yields largely will be declining. So people will try to take as much as they can take, load up ahead of, maybe taking profit by selling off as we progress into the week.
Okay. Okay, so Taiwo, we leave it there. We thank you for that analysis. And of course, our eyes are always on the market. That was Taiwo Alajubu, fixed forex dealer at FSTH Merchant Bank. Now take a look at your board there. Another session of decline from 2.47% decline recorded on Wednesday, but this is what it turned out, 2.03%. And this time, no thanks to MTN share price, which fell by about 4.6% approximately. And then some banking stocks also weighed on the market. So we've seen it pull back from the 669.25 points, which it closed for Tuesday, down to about 62,748.94. And of course, we also see the market capitalization, the total value of the market, dropping from 35 trillion naira to about this level that you see on your board there. Taking a look at the sectoral performance, we also see another lackluster performance for the market. Only the industrial goods counter was in the green, and this is due to the fact that investors are still taking advantage of the gains that we've had so far, and we're still at the 15-year highest level which was achieved, and of course the highest level so far for the market is 66,671.25, which was achieved at March 2008. Then for the volume of activities, there we saw it was down by more than just there by about 31.4%. Of course, for the value, 10.4, and then for the number of deals, more than 10,200. Ini, so that's it for the markets, and we will be looking out for next week how it turns out.
Yeah, sure. Thank you so much. But of course, we'll have a summary of all of this tomorrow, 7 p.m. Capital Market. Thank you. And you too. All right, let's move to another market now, the crypto market, and see how that is doing. Remember yesterday that uncertainty had started to reign on that market, but we see it's back to greed now. Maybe because Ladi is not in today, so the market can do much better. So we see it at greed even surpassed the 50% or 50 index point to 60 there. And I guess it's because sentiments are kind of stabilizing, more positive sentiments. If we look at the prices there to see what has happened, especially to the price of Bitcoin, there you have it. It's a gain. That's one of the drivers of it. And it's finally gone past that 30,000. It's now at 31,397 after that 3.48% gain on Bitcoin. Very interesting. I wonder if this has anything to do with a little bit of victory that went on with the SEC in the United States, but we'll talk about that. Ethereum has also gained even much more at 7.47%. It's now more than 2,000. BNB also very good gains. Look at Cardano there, 25%, almost 25.5%. XRP even surpassed 50%. So sentiments have changed. But let's see who or what is driving this. Gilbert Jopata, our financial market analyst, joins us for this conversation. Hi, Gilbert. Good morning.
Yeah, good morning. It's a beautiful day in the market.
Yeah, what's going on? I mean, can you imagine if an XRP had 67% up, then we finally crossed the 30% that we've been holding on for how many weeks now? What is this move about?
Okay, the audience that followed the session where we assessed what we should expect for the second half of 2023 shouldn't find this surprising news. You know, we mentioned how Ripple case was bullish for crypto since its court verdict will result in a clearer regulatory framework for the industry. And this case has lingered for the past 3 years with a fair share of drama and intrigue. But I still consider yesterday's ruling as a partial victory. And this is because, according to the verdict, Ripple first sold about 728 million worth of XRP directly to institutional investors, but they were never bought with the expectation that they will make profits. While the second was that retail investors that bought on exchanges, which was regarded there as programmatic sales through exchanges or algorithm, that the SEC could not definitely say whether the speculative investors had a reasonable expectation for profits. But what is clear is that the court verdict on the sales to institution could be readdressed by the SEC for them to make sure it countered security. However, yesterday's verdict is a hallmark of several other crypto. It's a hallmark for several other crypto exchanges or companies out there like Binance, Coinbase, and Gemini, because I expect them to challenge the SEC classification of security afterwards. And this will actually bring in more regulatory clarity, increase investors' confidence, boost even the price of cryptos. You know, as at yesterday in the night, we hit about over a 96% gain on XRP. And this will also encourage innovation in the marketplace. So this is a win for the cryptocurrency market. There is excitement and bullish sentiment in the marketplace.
But is this strong enough to sustain a bull run, or is this just a fry in the pan?
Well, technically, when you look at XRP, there is one thing. The technical level of the market charts, it carries its narrative. So what happens is that the news always comes with it. I think that we're about to have a fair share of an alt rally, and XRP is going to lead this. And this is actually confidence on altcoin, you know, because this actually means that so many altcoins out there that were classified as security could go challenge the fact that they are not a security. So the Bitcoin dominance may drop, and a fair share will come into alt. So I see XRP leading a momentum for, should I say, a rally in the alt markets.
I mean, when you talk about Bitcoin dominance being challenged, Gilbert, I don't know if we want to go there again. I guess I thought we had agreed that Bitcoin is the king of crypto.
It's still the king. It's still the king anyway. But Bitcoin needs to let some other assets breathe and have a fair share if they are giving us fair value in the marketplace. You know, the marketplace reward those who bring in value into the market. So regardless, Bitcoin is king, but there are other several exchanges or crypto projects out there bringing real-time solution into the marketplace. So it's a good thing if they also have a fair share of the market cap.
All right. Thank you so much, Gilbert Jokwata, for taking time out to have a conversation with us this morning.
Yeah, thanks for having me.
All right. So with that, we'll say thank you so much for being a part of the 275 minutes that we have done this week. And we'll be having current and relevant business conversations that help you make decisions when it comes to economy and business. We'll do it again next week, God's grace. Remember, you can watch Business Morning every time on our YouTube channel. I'll be back at 1:30 to give you update from the world of business since Ladi is not here. So I'll see you again 1:30. I'm Ini John Mekwa.